Accounting AS level. Chapter 1. Role and purpose of accounting. When we talk about accounting, accounting involves analyzing, recording, and communicating financial information. That's what accounting is. So when we talk about recording, this involves putting together the transactions of a business for a record purpose, so as it becomes a reference. So in business, we exchange goods and services. So in the course of exchanging these goods and services, we need a reference to them. We need a record for future purpose or for reference purpose. That is why we need accounting. So accounting will record this transaction for us.
Record transactions in like
That's
Excel and all that.
Wherever, in as much as it's been kept, we need the record. Then when you talk about analyzing, that means you are measuring the weight of those information. You're using it to compare. You need to check the accuracy of those information. That is about analyzing. So as soon as you're able to, you have a question?
Analyzing the recordings or analyzing?
Analyzing the recordings, the information, the transactions.
Okay.
That is what you are analyzing.
Okay.
So you want to know what you have made in terms of all the business activity that you have done.
Yes.
So you need to know what money has come in, what goes out,
Yes.
who you are owing, who is owing you. All this should be done.
Okay.
Then as soon as you're able to do this, then you are doing this for a purpose, and the purpose is to be able to communicate with the users of accounting information.
Yes.
Because whatever transaction we do, there are some people who own the business. There are some people who are waiting to hear from us. They need feedback.
Okay.
So this feedback will be through communication.
Okay.
So communication simply means informing users of accounting information about the financial information.
Okay.
Is communication clear?
So first we record the transactions that happens, then we analyze these transactions, and then with the analyzing we go and communicate
We
about
pass
all
those
this
information to the accounting users, which can be which can be government,
maybe the owner of the
shareholders,
business.
whoever they have.
Perfect.
Yeah. I think it's clear.
Yeah.
So that's about recording, analyzing, and communication. Then financial and management accounting. What makes them differ? Financial accounting is about the financial statement of the business. No, don't worry, I'm fine. Don't worry. Financial accounting is about the financial aspect of the business, and for management accounting, it's strictly talking about planning and control. Do you get the difference here?
Yes.
So when you put together the accounting information you have gathered in terms of profit, revenue, expenditure, assets, liabilities, all through this financial statement, that is financial accounting.
Okay.
Then for management accounting, it involves planning and control. Then what do you plan on? You plan on the financial information you have. So you use your financial statement for part of your planning as as part of management accounting. So do you get what I'm saying here?
Mhm.
Financial accounting can be seen as for external users. But when it comes to management accounting, it involves the internal users. So they use those information to make business decisions. So management accounting is about controlling and making decisions about the business and planning.
Can you explain financial accounting again?
For financial accounting, it involves putting together items such as revenue, expenditure, profit, assets, liabilities, capital of the business. So these are all that financial accounting is all about. So when you talk about financial statement, it means both the income statement or the statement of profit and loss, statement of profit and loss accounts, and statement of financial position.
Financial accounting is managing.
Financial statements.
Financial is like managing the money and everything.
Yes.
And
so
then
the value,
yes.
the worth of the business is through financial accounting.
Mm-hmm.
So how you control the business based on the financial information you have is through management accounting.
And this is used when you analyze. Perfect.
Is it clear?
And then we have management accounting, which is the head.
Yeah, it
which
talks
manages.
about planning and controlling using the financial information.
Mm-hmm.
Is it clear? So we move on. The rules guiding accounting or financial accounts. Are you there?
Yes.
So financial accounts, for financial accounting one, the disclosure of financial information must be a compliance of law. So you're not just disclosing this information, you are publishing this information according to what the law of the country wants.
Okay.
So you don't just decide what you do, it is based on what the law says.
Okay.
You get the first point? The second one, they said reports should contain financial information which is useful to all users. I wrote information must be those useful for users. So you don't just give all the information, you give information that is peculiar to the users that they really want to know about.
Okay.
You get that? The information is designed for external users such as government. The information is designed for external users. It's financial accounting. If it is management accounting, it's for internal users.
What if it is a private equity, private firm? Do they publish this information
Yeah.
to the government?
Both private limited companies and public limited companies, they have to publish their accounts.
To the government so they can get taxation and pay tax
Yes.
by the financial
Yeah.
Okay.
Got that?
Mhm.
All information presented must be based on accounting concepts. All information presented must be based on accounting concepts. What are accounting concepts? Accounting concepts are guidelines on accounting. So we have the business entity, we have going concern, we have the measurements, we have different accounting concepts. These are the things we have to follow when we are preparing our accounts. We call them accounting concepts and principles.
Mhm.
So the principles we have to follow when we are opening an account or when we are preparing an account are called accounting concepts. So your financial accounts must be in line with accounting concepts and conventions.
Mhm.
Is it clear? Is it clear, please?
Yes.
Any question about that?
So we have 4. We have disclosure of financial information must be competitive of law. So everything that we do have to be regarding to the law.
According to the law, yes.
We cannot do any like fraud, tax, money fraud. Okay.
no.
Second thing is information must be those useful for users.
Yes.
It must be capable for the like only information like
It must be strictly
to the user.
for the users.
And the environment is designed for external such as government.
Government, shareholders, investors, and the rest.
All information presented must be based on accounting concepts,
Concepts and guidelines.
guidelines
Principles.
of accounting.
Yes.
Like when you study accounting, you
The
understand.
going concern, the entity, going concern, business entity. We have what are other accounting concepts we have? Duality.
Mhm.
These are accounting concepts. We're going to get there.
Yeah,
anyway.
yeah,
Okay.
Management account.
So we go to management accounting. For management accounting, it's simply about how to control and plan the business. You get that?
Yes.
Okay. So we have the standards that has to be met when we are talking about accounting, management accounting. One, the information is detailed and up to date. So because it's management, it's for the management. So whatever information we need, they are information that are up to this present time.
Yes.
It's not just going to be in the past. It has to be to the present time.
Okay.
You get that? Because when you are planning, you have to plan based on what information is with you.
Yes.
2, management accounting include budgets and cost reports. So here it is about the forward and backward. So we talk about budget. Budget is a financial plan
Mhm.
on spending and revenue. Do you understand?
Yes.
So management, it is management that does this. You don't have to tell the world your budget. You don't need to show them what your budget is, right?
Okay.
So this is management. It's internal. I think it's clear.
Yes.
Accounts are confidential for internal use only. So whatever information they have in management accounting, it's strictly confidential. It doesn't go outside.
For not like financial that you tell to the government.
Yes. These ones are based on how they want to run the company. Is
Okay.
it clear? There's no standard format. So company A will have different format from company B. It depends on different perspective.
No, and the other one
It's
you
not
have-
standardized. Yeah, for the other one, for financial accounting, it is
Yeah.
based on accounting concepts.
Yes, accounting concepts.
So all
guidelines.
financial accounts are the same anywhere in the world.
Yes.
Is it clear? The information is both financial and non-financial.
Yes.
So it involves money and involves those that are not money, maybe
Yes.
purchase of assets and those stuffs. You
Okay.
don't have to tell people about that. Is it clear?
Mhm.
Any question about that? So we go down to,
The need for financial accounting.
yeah, are you there?
Yes.
So the need for financial accounting, we're simply talking about reasons why we open or we record accounting or we have financial accounting.
Okay.
Number 1. So I wrote, this implies to the reasons accounting is prepared. 1, to assess the trading activities of the business. We're talking about assessing trading activities of the business. You want to measure, you want to evaluate the business activities. Are you doing well or not? That's the ways to know is through financial statements. You get that? Because your financial statement will record your business activity in terms of trading and in terms of selling.
Yes.
Do you understand? The second point, to enable external users to see how managers are performing. So this is also for investors. They want to know, the owners of the business, you can only communicate to them through your financial statement, right?
Yes.
You prepare the financial statement. So the financial statement will state if the business is doing well or not, yes or no.
Mhm.
So the performance of the business can be communicated to the owners of the business through the financial information or the financial statement. Is it clear?
Mhm.
Do you get it, please?
They enable external owners to see how managers are performing.
Yes.
Okay.
So if the financial statement is fine, is healthy, it means the managers are doing
Doing
well.
good here.
The third one, to control the activities of the business. That's management accounting.
Okay.
Do you understand? It's part of accounting. The next one, to plan for the future. That is still management accounting. I think it's clear.
Yes. Okay.
To assist in raising finance. So as soon as you have your financial statement, you would know if there's need for short-term finance or not. So if there's a need for short-term finance, you will be able to get it through a bank overdraft.
Okay.
Also, if you have to facilitate a loan, the banks will ask for a financial statement. They want to see how healthy your company is.
Yes.
So to be sure if you have those assets to pay back their loans.
We started in business. Yeah.
Is it clear? Any question about that? So we go to the users of financial accounting. So go to users of financial accounting. When we talk about users of financial accounting, we're talking about those that have interest in the financial statement of the business. The first one, owners. Who are the owners? They have the business, right? They are the entrepreneurs. They set up the business. So why do they have interest in your financial accounting? Why do you need to communicate to them about the financial statements? Because they want to know, you can use it, it becomes a yardstick to determine the performance of both managers and directors. Because the financial statement will communicate to them if the managers are doing well or not.
Okay.
So that's for the owners. I think it's clear.
Mm-hmm.
We go to trade creditors.
They want to know how to do it. Okay.
Are you there?
Yes.
For trade creditors, what do they want to know? They want to know if the business has less creditors or not. If the business has a lot of debts to pay. If the business has a lot of debts to pay, they wouldn't want to be part of those things. They will not give you supplies.
Okay.
But if your debts are less, they will be sure that you can pay back. Then they will supply you on credit.
Okay.
Because they are suppliers on credit, they sell to you to pay at a later date.
Yes.
Before they sell to you, they want to be sure that you don't have a lot of creditors on your neck. Because if you do have, then it's a risk for them. They wouldn't want to do.
Yes.
Do you get that? So they have the long-term creditors. It's still the same as the lenders, the banks, they give you loans. So you should understand that. They want you to be sure that you are credit worthy. That is the point about that. So I didn't write too much about that. Then we go to employees. For employees, we have the past employees and the present employees or existing employees. For the past employees, those ones that have worked in your company before, they want to be sure that their pensions are being paid. You know what pensions are, right?
Percentage.
No, pensions are what you pay them after retirement.
After retirement.
Yeah, they want to be sure that you'll be able to pay. So their concern about the financial statement is to see if the business is able to pay their pensions.
For private firms, not for.
Yeah, firms, businesses, they pay pensions.
Yes, but like government, they already.
Government, yes.
Like anyone that works in the government, they already give them money.
Yeah, for private firms, these days they contribute towards their pension.
Exactly.
You can contribute towards your pension. So if if the company is taking certain percentage from you because of your pension, they want to be sure that at the end of it all, when the time for pension is, when the time for gratitude is arrived, they are able to get their money back.
Okay.
These days, private sector, they tell you to contribute towards your pension.
Okay.
So they take that amount from your salary, and after 10 years or 15 years or 20 years of working, they pay you all. So you are concerned. So if the business is not doing well, how are they going to be able to return your pension contribution? Do you understand now?
So,
Do you get it or not?
yes.
And for existing owners, for existing employees, they want to be sure that the business can continue working, the business can continue its operation. Because it is only when the business can continue operating, that is when their salary is intact.
Yes.
They want to, that's their own concern. Is it clear?
Yes.
For bankers, they want to be sure the business has enough assets to guarantee a loan. So if they want to give you a loan, they want to be sure that you have a collateral for that. So the collateral will be known based on the value of your assets.
Yes.
Is it clear? Is it clear, please?
Mm-hmm.
For customers, they always want to buy from you, yes or no? They want to be sure that you will be consistent in supplying.
Yes.
So if the business is not doing well, if the financial statement is not healthy, then you can't be supplying, you won't be able to supply.
Mm-hmm.
That's their own concern, is it clear?
Yes.
For analysts, they are advisors. They advise you, go to them. Those are the people you consult whenever you want to invest in a business. They advise you that, oh, the business you want to invest on is healthy. Yes, they have a...
Like when you want to go like invest in a crypto coin, they have analysts that analyze the crypto and say, is this going to go up or down? Yes.
So
Understand.
don't use crypto here, please, but use investors,
Okay.
businesses.
Like
So-
if they want to invest in real estate,
Yes.
they analyze
They are the
land
people you go
and-
to. They advise you if the venture that you are putting investment into is ideal or not.
Okay.
So how are they going to be able to do that? They need they need the company's financial information.
Mm-hmm.
Do you understand that? Do you understand that? Please?
Yes.
Then government, they need to know the financial position to assess the taxpayers, the tax payable. They want to know what the amount of tax you are paying. They want to be sure that the amount of tax you are paying is what you are supposed to pay.
Okay.
So they know this through the financial statement.
Miss, you forgot competitors.
I'm still going to talk. Oh, competitors, thank you. For competitors, what do they need your financial information for? They want to use it to compare their own financial position, if they are doing well or not. They want to compare their position, their performance. So if your financial position is compared with theirs, they would know if you are doing well or not.
How will they know when we're managing accounts so it's private?
No, financial accounts.
Financial accounts.
It's been published.
Been published.
So it means you can also compare yours with those of your competitors to know if you are doing well than them.
Yes.
Is it clear? Any question about that? Then we have the management. For management, they want to evaluate their own performance too. They use it to evaluate their own performance. Is it clear?
Mm-hmm.
Do you understand management here?
Yes, they evaluate the performance of the business.
They want to evaluate their performance. They want to know if they are doing well too. Because if the business is doing well, it means the management has always taken the right decision.
Management one manages the business. Yeah.
Do you understand? And the last one is the public. What does the public need it for? The local community. They have interest in the consistency of the business. Because if the business is doing well, it impacts the development of the community.
The area.
Yeah, because if the business shuts down or closes down,
It'll affect.
it doesn't develop the environment.
Exactly.
Do you understand? So these are users of accounting information and why why it is important to have financial information.
Yes.
Any question about it?
It's nice to see how accounting counts on every side of things, business and economy. But until now, Mr. It's got too much